Some 41 million federal student loan borrowers were given a special and in many cases life-saving treat for the holidays. The COVID-19 moratorium on student loan payments was extended yet again. President Biden announced today that his administration would extend the pause until May 1st, 2022, as COVID-19 cases rise due to the highly transmissible Omicron variant. This announcement comes after weeks of pressure from constituents and fellow Democratic lawmakers on the Hill. Biden said that he hopes this move would further strengthen our economic recovery. Today's announcement is an especially huge sigh of relief for borrowers of color who would have been disproportionately impacted from resuming student loan payments. In fact, some Black and Latino borrowers have seen and have likened the burden of student loan debt to a modern-day form of Jim Crow. My next guest can elaborate. Wil Del Pilar joins me from State College of Pennsylvania. He's the Vice President of Higher Education for Ed Trust. Good to see you, Wil.
Great to see you. Thanks for having me on.
Absolutely. We couldn't talk about this without having you on. Let's build off of what I was just saying. Give us some of the context as to why borrowers of color are so negatively impacted with college expenses compared to their white counterparts. It's pretty stark.
Yeah, we have a crisis in this country where Black students specifically, they're more likely to borrow. They borrow more, and they struggle more with repayment than any other group that we see nationally. And so, we have a continuing crisis in this country. Nationally, students in 2018, students borrowed around $29,000, but Black students borrowed around $34,000. And so Black families are borrowing more, they take longer to repay, and are more likely to default than any other group.
And Wil, to add to that, I know that experience firsthand of being a first-generation college student, not having a parent who could even do a Parent Plus loan, and taking out a lot more than a lot of the students who I was in class with at the time as well. To your point earlier, just a few months ago, your group, the Education Trust, conducted a survey with 1,300 Black borrowers, and you asked them questions about their experiences dealing with that student loan debt and the racial wealth gap. Many equated income-driven repayment, or IDR plans, to a life sentence of debt and having shackles on their ankles. And a big reason for that is because they weren't able to afford some of their basic necessities, like money for food, rent, or even savings. What are some other things found in that survey that compares the student loan debt trap to oppressive periods in American history like Jim Crow?
Yeah, absolutely right. I would argue that student debt has absolutely become a lifetime sentence for many borrowers. And what we're seeing is, in addition to some of the things that you listed, is that folks were putting off the normal life events like getting married or purchasing a home or saving for retirement. But in addition to that, it's having significant negative effects on folks' mental health. And when you're, especially Black folks in our study, 71% of the respondents in our study reported that student debt had a negative impact on their quality of life. 67 reported that it actually had a negative impact on their mental health. And so we know that it's having significant impacts on folks. We had one of the participants in our study who had their loan servicer actually send the police out for a wellness check because they were concerned about her mental health and were concerned that she was going to harm herself. And so while this student debt pause, I think it's going to help folks. It's not a long-term solution. It's only a Band-Aid that we're gonna have to face, and we're gonna have to deal with again in 3 more months. And so, it has significant impacts on folks' normal life events, but more than that, it has impacts on folks' mental health.
And Wil, what are organizations like Ed Trust doing for this long-term trajectory? We know that this is a 3-month stall, and that's going to be a great reprieve for certain borrowers, particularly those of color. But what happens after those 3 months? Are we going to see a situation like we did with housing, where individuals were still, basically waiting to see what was going to happen once that moratorium was up? We can't have moratorium after moratorium after moratorium. So what is going to happen, and what levers are you using to ensure that these borrowers aren't basically saddled with this debt that they can never overcome?
Well, I think if we're going to find long-term solutions, we could start with at least $50,000 student debt cancellation. If we cancel at least $50,000 of debt per borrower, we'll have a significant impact. In fact, 75% of federal borrowers will have their debt canceled. This includes full cancellation for 85% of Black borrowers and 96% of Latino borrowers. And so I think we need to start with really thinking about a longer term solution. And that solution isn't continuing to pause payment, but it is comprehensive debt cancellation at least $50,000. In addition to that, I think there are some other things we need to do. One of these is double the Pell Grant, which is a grant for low-income students. We need to make college debt-free for 2 and 4 years of college, in addition to canceling student debt. And so I do think there needs to be a comprehensive approach adopted and not a piecemeal approach where we cancel debt, but in 10 years we're in the exact same place because we didn't invest in Pell Grants. We didn't invest in free college for 2 and 4 years, and we didn't invest in completion at some comprehensive level.
And to your point about some of the cancellation, why hasn't the Biden administration made good on its promise to forgive at the very least $10,000 in debt? What do you think is holding them back?
Well, I think that the administration has really questioned whether they have the legal authority and have been really trying to get the support of Congress. But we would argue, and I think other legal scholars have argued, that the same authority that the department has to pause interest payments, the same authority they have to pause payments, gives them the authority to cancel this debt. And so I think they're trying to get broader support from Congress, but I think they do have unilateral authority to cancel debt. If it's at the $10,000 level, there's some arguments made for that. But in our study, most of our participants borrowed $34,000 for undergraduate degree, and it was over $100,000 for a graduate degree. So $10,000, while generous, I would say is a drop in the bucket, and I don't know if it hits the mark, especially for Black borrowers.
As we're seeing more and more people recognize the sheer amount of student loan debt that America faces, I think there's a ticker on Twitter that actually shows per day where we are, and that it's going to be the next multi-trillion-dollar bubble for this country economically. With that being said, how does an organization like Ed Trust that also supports minorities going to college and working with institutions to cater to the needs of minority students, how do you work around the push in the community now to say, what is the bang for our buck when it comes to college, when we know that a lot of Black and brown borrowers get out not only saddled with debt, but not having the job opportunities or availability of those opportunities that their white counterparts end up having?
I mean, I think that we have to continue to push and really use data to show that the most value is at the bachelor's degree level or with a college degree. And so I think the messaging that we continue to see and continue to show, and that the value is with folks, and the payback for folks who have some level of college degree. We saw that after the last economic recession, that folks who had a college degree got the good jobs, and those were jobs with benefits, those were jobs with retirement, those were jobs that had health care. And so, we have to continue to use data to show that there's real value there. I think states also need to continue investing not only in need-based grant, but also to invest in their public institutions of higher education. We see significant differences in how states are investing in higher education, and there isn't uniformity around what affordability looks like. Affordability is dictated overwhelmingly by the zip code in the state you find yourself in. So if you're in California, it's significantly more affordable to go to a public institution than if you're living in a state, for example, like New Hampshire, that invests very little. And so I would argue that, in addition to using data to show the value of higher education, in addition to, to really pushing and encouraging students to continue on into higher education, we need to push states to invest in higher education and public higher education, and to invest in need-based aid and not in merit aid like states like Georgia do. And a recent study showed that the merit aid overwhelmingly went to wealthier white students and not students of color in that state. And so I think that there is a role for college counselors to play, for high school counselors to play, but states have a significant role to play as well.
Wil Del Pilar, so much more to unpack, but we are out of time. Thanks for coming on the show.